Hi, this is Matthew Cratter from Trader University, and today I want to talk a little bit more about dividend investing. I'm first going to give you a free way that you can do it yourself, completely on your own, making your own decisions. I'm going to show you a very good pool to fish in. And secondly, I'm going to show you a way that you can follow along with my dividend stock portfolio if you want to see which dividend stocks I'm buying. So there'll be a free option and a paid option. Now, if you're interested in learning how the stock market actually works, how to make money in both bull and bear markets, be sure to hit that subscribe button. So we will be talking about how you can follow my dividend stock portfolio, but I just wanted to give you a more general idea of how it fits in to how I've been investing over the last few years, so you can sort of know the thought process behind it. And you can see if it applies to you. Obviously, none of this is investment advice. So really for the past, call it 10 or 15 years, I've been investing in a lot of startups in Silicon Valley where I used to live. I've also been investing in some venture capital funds, not necessarily the ones that are listed here, but venture capital funds in general. This has been sort of my aggressive bucket for investing. Obviously also been trading a lot in my own trading accounts. I've really focused on the strategies that I teach in my books and also on this channel and in my paid courses, really focusing on momentum stocks. So those have been the real growth drivers in my overall portfolio. Recently, I began to move much more into Bitcoin. If you're interested in that, you can see my other videos on it. So this is sort of the aggressive part of my personal portfolio. And then I've always had a more conservative part. And I'm not going to give you exact percentages simply because what I'm doing will not apply to you. Everyone's different. Everyone has different risk tolerances. Everyone has different growth objectives. Everyone has different job stability and different income levels, etc. But what I did is I had this very aggressive bucket: venture capital, momentum stocks, individual Silicon Valley stocks, sort of as an angel investor. And then I had my conservative bucket. And in that conservative bucket, I used to hold a lot of treasuries. Now I remember holding T-bills when they were yielding 5-6% in the early 2000s, which was wonderful, depending, of course, what the inflation rate was back then. But I think it was still a very good real return. You can see now that treasury yields have come way down. You have to go out. You have to go out to 30 years to even get like 1.4%. I used to get 6% even in these smaller maturities like 6 month or 1 month, 1 year T-bills. And so I kind of had a mixture of these treasury bills as well as high yield savings accounts. The yields on these have become pretty pathetic as well as the Fed has cut rates. And so I had these sort of cash savings that are very liquid. In case there's investment opportunity, I would park some amount of cash in high yield savings accounts. Also in treasuries, I would build a ladder, for example, where I'd buy a 5-year treasury, and then a 2-year, then a 1-year T-bill, and maybe a little bit in 10 years. And then as they rolled down and matured, I would reinvest further out the curve. This is called a bond ladder. It doesn't make a whole lot of sense anymore because these yields are so low, but that's what I used to do, and I combine that with high yield savings accounts. Also, obviously, some real estate investments, that the house that I live in, as well as a few rentals, single family homes in various parts of the country. So this was sort of a conservative bucket, and I used to be able to make anywhere from 3 to 6% on the high yield savings and the treasuries, and then maybe 8 to 10%, maybe a little bit more, just in terms of a rental yield or gross rental yield in terms of renting out these homes. I bought some homes in the wake of the housing crash in 2011, 2012, and you can read about that on my website. But what has happened now? What is there to do now? Well, this is the yield on the 2-year treasury. So I talked about how I was investing in U.S. treasuries, quote unquote risk-free investment, because the U.S. government can always print more money or tax people to pay you back. The last time I bought these, the yield was about 2 years ago, and the yield was 2.5%. Not a great deal. I got fairly lucky. I got it near I bought some of these near the top of the yields, and you can see that yields have just plummeted since then. They're now around 0.2, call it. So they're really down, call it maybe 90% or more. And so I did this 2 years ago. There was one in particular, I put $100,000 in one of these, and that one has just matured. And so I already have enough in Bitcoin, for example, and these other more risky investments. And so I was looking for a place to reinvest this. Didn't want to invest it in high yield savings accounts. I've got enough real estate for now. And so I began to reconsider dividend stocks. And that's what I'm going to be talking about here. Now, in particular, I began to consider this as I began to realize that the Fed, the U.S. Central Bank, the Federal Reserve, is going to be using yield curve control. I made a video about this yesterday. It's got kind of a clickbaity title about Warren Buffett saying stocks are cheap. But if you dig into here, there's some real content about how the Fed is going to keep yields low for a very long period of time. They've already said they're going to keep short-term rates close to zero for at least until 2022. So it's not really, you can't really do a waiting game and hope that these Treasury yields rise back up to 2 or 3%. It looks like that's not going to happen. There are very structural reasons that the Fed is going to have to keep buying Treasuries, which I talk about in yesterday's video. I'll link that below. So this really makes dividend stocks, especially blue chip, large cap dividend stocks, quite interesting. Maybe some medium cap and some small cap. So far, I've just focused on the large cap. And so these dividend stocks have a yield of roughly, call it around 2%. So they're decent, sort of a 2% on a weighted average. So they're a decent replacement, depending on your risk tolerance. Again, this is for me, I'm talking about, they're decent replacement for me for this 2-year Treasury position. Obviously, stocks can go down a lot. If you need the capital in the middle of a bear market when stocks have gone down 50%, you can be in a little bit of trouble. So these are issues you have to think through for yourself. But basically, the Fed is forcing all of us into riskier assets because of their terrible, terrible policies. But we do have to live with this because the inflation rate, they're targeting an inflation rate of 2%. It's probably going to end up being higher than that. And so if you are earning even 1% or 1.5% in a savings account or in a Treasury, you are actually losing money on a real basis because you're making, call it 1.5%, and you're losing 2% a year to inflation. So this is why dividend stocks become attractive, especially companies that can continue to grow their revenues, grow their operating income and free cash flow, and continue to pay higher and higher dividends. Now, the yields are fairly low right now, but if you watch my video about how Warren Buffett is making a 50% dividend yield, you'll see the principles behind this. How if you hold a dividend stock for a certain period of time and everything goes well, the stock keeps increasing its dividend payment, your dividend yield on the cost of the stock that you paid can get up to, in Warren Buffett's case, this is actually covering Coca-Cola, he's getting a 50% dividend yield roughly on the cost of his shares. So let me show you a really easy way you can do this for yourself. You can buy a basket called the S&P 500 Dividend Aristocrats. Again, not investment advice, but these are companies from the S&P 500 that have raised their dividend payouts for 25 years or more. So they're a very healthy, robust group of companies, and they must have some sort of investment moat or competitive advantage to be able to keep doing this. They also, you know that they have real earnings because every year they send 4 checks, every quarterly checks, or however they pay it out, to their investors. So what you can do, I'll link to this Wikipedia article. You can scroll down here and you can see the components. This is effective April 30th, 2020, so fairly recent. You can see the list of all the companies here that are dividend aristocrats. Obviously, Coke is included here, etc. And you can buy a basket of these. You can pick out individual ones. Maybe you know a lot about the beverage industry, so you'll be looking at Coke and Pepsi. Maybe you know a lot about oil and gas. You'll be looking at Chevron and ExxonMobil. I'm not huge fans of those. Maybe you're more focused on real estate trusts, or maybe consumer staples, etc. So you can go through here, pick companies that you are familiar with, whose products you use. If you eat Hormel Foods products, if you use Kimberly-Clark paper products, you know, you'll be buying something that you understand. Now, dividend investing can be very profitable. There's a great example that I use in my book on dividend investing about Ronald Reid, who was basically, in his day job, he was a janitor for many years. I think he worked for JCPenney, and he was also a gas station attendant and mechanic. So not definitely working class guy, not earning high income And yet, when he died in 2014, it was revealed because of his charitable donations that he had accumulated a fortune of $8 million investing in dividend stocks. He avoided tech stocks. He basically bought stocks in companies that he understood, whose products he used. And this works quite well if you have a long enough time horizon. Even if you're starting late and you have 10 or 20 years, it probably will work pretty well as well. You won't make $8 million, but maybe you will if your income's higher than a gas station attendant or a janitor. You can do really well. So I find this guy very inspiring. He was very frugal. He donated millions of dollars to hospitals and libraries at the time of his death, and lived just a really decent life, and still managed to save up a lot of money and do it in an honest way. So this is just meant to be a story that can inspire you, that even small investments, even if your income's very low, can really add up to a substantial amount of money. $8 million, especially in 2014, is a tremendous amount of money by any standard. So one way to do this is you buy a basket of dividend stocks. When they go down, maybe you buy some more of them, you dollar cost average into them. Now, what do you do if you don't want to have to pick out individual stocks from this list and you just want to buy a basket of them? But of course, buying, I don't know how many companies are here, but maybe there looks like 50 or 60. They're constantly adding companies and dropping companies, which is why I can't give you the exact number. But that can be a lot of individual stocks to buy. It's a lot of work. Maybe you don't have enough capital to spend to, even if you just buy a couple shares or even fractional shares. So there's a really easy way of doing this. You can buy this this ETF. This is a Shares ETF. It trades just like a stock. The ticker is NOBL. And this gets you exposure to all of these dividend aristocrats. You just buy this ticker and hold it, and you basically get exposure to all those companies. If a company drops out of the list, the ETF automatically takes care of that for you. It sells that company and buys the replacement company. Now, so it's currently trading about $67 a share. I imagine maybe through Robinhood, you might be able to even buy fractional shares of this, so less than one share. So this is really something that probably everyone, certainly everyone in sort of first world countries could invest in. One share would just be $67. You do that every month for 50 years, and you will probably end up with a substantial fortune. Now, the advantage of this is that when you hold this ETF, you're constantly being paid dividends. I think maybe they roll them up and pay you just 4 times a year. I can't remember exactly how it works. But then you can take those dividends and use it to buy more of this ETF or to buy more of other dividend stocks. Especially if you do this in a tax-advantaged account like an IRA, that can have a real advantage. And that's really how you compound your capital. You buy cash-generating assets like dividend stocks, and you use the cash that they throw off to buy more of them. If we go to the page, the ProShares page for this, we can see that it currently has a distribution yield. I think this is probably the best way to think of it at about 2.19%. I guess this is as of April 30th prices. 30-day yield, SEC 30-day yield. I can't remember exactly how this is calculated, but it's 2.5%. And then there's an expense ratio of 0.35%. So that looks roughly right. If you take 2.5 minus 0.35, you get roughly around 2.15 or 2.19. Obviously, stocks are constantly changing their dividends. If they cut their dividend or they don't raise their dividend, they get dropped from the S&P aristocrats list. So this is a very easy way to do it. You can pick individual companies, as we said. You can buy this ETF. You want to slowly cost average into it, perhaps. Again, not investment advice, but if you have $1,000 to invest, divide it into 12 pieces, and or let's say you have let's make the math really easy. You have $12,000 to invest, and so what you might do is invest $1,000 into NOBL at the beginning of every month for 12 months. That would add up to $12,000. So you don't buy it all at once. You can buy it all at once if your holding period, if you're planning on holding it for 30 years, it almost really doesn't matter. If you want to wait for a sell-off and maybe pick some up cheaper, you can also do that. But cost averaging, dollar cost averaging, where you buy a fixed dollar amount every month, maybe you take 5% of your after-tax paycheck and put it into this every month. Again, consult a financial advisor for the details. So that's one way to do it. You can also, I would say one problem with doing this, especially if you're going to pick individual companies, is you might end up with a few duds. So for example, General Electric used to be part of the Dividend aristocrats. It was dropped in 2010, and its performance after that was really abysmal. So it helps if you can read financial statements, if you can understand, if you can read a cash flow statement or an income statement or a balance sheet statement and have a sense, is this company going to be around? Are they growing their revenues? Are they growing their free cash flow, etc.? Or are they just, in the case of companies like ExxonMobil, for example, just taking on more and more debt in order to pay their dividend? That's not a good recipe for a long-term holding. So that's why I created this service. Basically, I'm taking this $100,000 that was invested until recently in 2-year Treasury notes, and I'm going to start to cost average that into dividend stocks. And I thought, why not let people follow along and watch me? People are always interested in what stocks I'm buying. I share a lot of my momentum stock names on YouTube, but this would be a more conservative investment. These dividend stocks, I don't think the returns will be as high as momentum stocks or Bitcoin, but the downside is also less, in my opinion. So that's why I created the service. Once a week, I'm going to buy approximately $2,000 worth of a new dividend stock. I may cost average into a stock if it goes down a lot and I really like it. But basically, by the end of call it 49 weeks from now, I will have invested the whole $100,000 into probably about 40 or 50 different dividend stocks, basically my favorite stocks. And as part of this service, when I buy the stock, you can watch me buying it in my account, and I'll buy the stock. I'll buy $2,000 worth of the stock, and then I'll walk through the financial statements. I'll walk through the growth prospects of the company. I'll look at the margins. I'll look at the free cash flow versus the dividend payments. I'll look at the long-term debt, and you'll sort of get an idea of how I'm thinking about the stock, why I think it's going to continue to be able to increase its dividends. And then you can make your own decision. Do you agree with my rationale? Or maybe you think that the company I'm buying is going to be put out of business by a competitor, etc. So you can then make your own decision, or you can go to your financial advisor and talk about it with them. But I really want to give you guys not just a list of the stocks I'm buying, but also showing you my thought process behind them, how I am thinking about the purchase, and sort of what stocks I'm selecting, what industries, what sectors, and also what metrics, what financial statement metrics I'm looking at to make the decision. So I'll be posting a new video probably once a week, usually on Mondays, depending obviously on market conditions. I did my first stock pick last week, bought approximately $2,000 worth of it last Monday, and hope to do another stock this Monday or Tuesday, really depending on what's happening in the market. So if you want to follow along with this, you can just click the link in the description notes below, and signing up for this will also get you access to all of my courses. So you can follow my financial statement analysis course if you're interested in stock options or futures, momentum stocks, making money with IPOs, and then my flagship course, Learn to Trade Stocks Like a Pro. So it's all here. You get access to all of it for the same price. So if this is something that interests you, you can click on this page. You can click on any of these boxes and see the list of lectures. And then you scroll down to the bottom and click where it says Get It Now. And I want to give you a coupon code because we're still in a recession. So if you click here where it says Have a Coupon Code and you type YT99, normally 30 days access to everything at Trader University Premium is just $125 for 30 days access. But if you use this coupon code YT99, click Update, it'll take $26 off. So you can get access to everything for 30 days for just $99. You can watch all the courses, you can take a look at all my dividends stock picks, and then you can cancel if you want, or you can remain a subscriber. There's no long-term contracts or anything, so if you cancel before 30 days, you won't be charged again. The other thing you can do is subscribe for a month, drop out for 6 months, come back and see which stocks I've bought in the meantime. And if the stock market's gone down, you might be able to buy them at cheaper prices than I have done. Just wanted to give you guys some transparency here into one of my investment portfolios, especially for the more conservative, income-based best investors. You get an idea of what I'm thinking about. You can see if you agree or disagree. and then make your own decisions. So check it out if it interests you, especially the courses. If you want to learn how to trade momentum stocks or also see into my Bitcoin account, you can check that out as well as part of your subscription. Everything's included, including, I should have mentioned, a list of momentum stocks as well, my favorite momentum stocks, and I'm constantly updating that list. Hope you guys found this helpful, and if you did, please hit the like button and the subscribe button. Let me know your questions and comments in the comment section below, and I look forward to seeing you in the next video.